Hi everyone, welcome to April's House View with Sygnum Bank. Thanks again for joining us. I'm here again with Katalin Tischhauser, Sygnum's Head of Investment Research, for another exciting session. Hi Kat, how are you?
Doing very well. How are you?
Fantastic as always. So all content and opinions presented here are in this live stream are not investment advice. So look, let's get going. Crypto market had a strong quarter in 2024 and also started April pretty positively as well. Bitcoin kicked off the second week of April in a classic bull market style with numbers soaring beyond 70K US. Bitcoin ETFs saw the trading volume surge to a record 111 billion in March, nearly triple the 42 billion traded in February, which leads us, I guess, very nicely into the first topic, Kat, is there more to come? Certainly, overall, the crypto market demonstrated historically positive performance over the last quarter. Now, approaching the halving with a number of factors at play, maybe with more uncertainty around the traditional patterns. So let us into what's in the minds of investors right now.
Yes, so there is definitely a deep structural bullishness in the crypto market currently. We can see this in the corrections that we've experienced recently. They're very mild, they're very short-lived. There's a lot more leverage compared to a few months ago, which in itself exacerbates the price moves on liquidations. And even with that, the down moves have been very limited, and very quickly the market starts bubbling up again. Basically, sellers are just not getting on board with the corrections. So there is this very strong sentiment and strongly held fundamental views. And you also alluded to historic patterns, and they're not, even though that's all what they are, is looking at how the market behaved in the past, but they're not irrelevant because market psychology has a lot of consistency. And for example, every time so far that Bitcoin made a new all-time high in a cycle, afterwards, within a couple of months, the price of Bitcoin doubled. So that's an interesting fact to keep in mind, as well as basically the pattern of cycles and where we are, which all in themselves promise more upside.
Yeah. I mean, looking a bit broader though, some analysts at Bernstein recently projected the market cap could jump as high as 7.5 trillion by the end of next year, which is a big number. This would, of course, imply performance from all the market segments. I mean, what are you looking for here?
Yeah, so just to put that number in context, currently it's about 2.6 trillion. So that's a tripling that Bernstein is predicting. And it's sort of a two-part question. What will Bitcoin do? What will the rest of the market do? And as far as the rest of the market is concerned, actually, I would point out that even though Bitcoin has made a new all-time high, the rest of the market has not. Actually, the market overall is still 20% below the all-time high. And some key tokens like Ether is 25% below, Solana 35% below the all-time high. So as far as the rest of the market is concerned, a lot of the momentum still lies ahead. And it's usually the case that Bitcoin leads the bull cycles and then it moves on, broadens out. And there's, as far as the rest of the market is concerned, there's two key drivers. And one is this one that Bitcoin leads, and we could call it the Bitcoin wealth effect. So when people have made a fair amount of money in Bitcoin, then they kind of start looking beyond Bitcoin. And the second is obviously more bottom up, and is the success of use cases. Is anything emerging that's really getting traction across the market, across applications? And we are definitely seeing real traction and strong narratives in for a couple of use cases. There's, of course, anything related to AI. There's the decentralized physical infrastructure networks that are really taking off and have a strong user growth, but also a very strong narrative behind them. Tokenization, for sure, now that BlackRock also really got on board tokenizing their money market fund. There's also this very successful Athena tokenized hedge fund. Some refer to it as a stablecoin, even Athena does, which I think is unfortunate because that it is not. But as a tokenized hedge fund, it's been incredibly successful, drawing in a huge amount of assets. So there are real use cases showing real traction. And also, I would point out that when we talk about the market cap, or well, it's Bernstein in this case who did, it's not just performance; it's also the market growing from new launches and new tokens, basically more tokens issued. And Bernstein itself predicted that the stablecoin market is likely to grow over the next few years to 2.8 trillion market capitalization. So if we consider new launches, and there's of course lots of airdrops that we're seeing now, lots of projects launching, then basically that number would imply a roughly doubling of the performance of the market from these levels, which actually is perfectly in line with how the previous cycles behaved. And when I say perfectly in line, the performance to peak has been lower in each consecutive cycle, obviously, because initially it was astronomical coming from a low base, and the smaller the prices and the market cap was, the bigger the percentages, tens of thousands of percent. The last cycle, it was 2,000 to 2,500% performance. But if we take into account this kind of leveling off, even then, the kinds of numbers that Bernstein is talking about is just in line with what the market has done historically. And then the question is, that's what the pattern would predict, but then is there a chance that maybe we outperform that and we break out on the upside? And there are definitely reasons to think that might happen. There's quite a strong likelihood of demand shocks.
Yeah, there's certainly still a lot of bullish talk about what you call the wealth effect. I mean, recently Standard Chartered reiterated its view that Bitcoin will pass 250K soon. But coming back to this, which perhaps we could call the bellwether crypto, what are the couple of drivers that are needed to kind of further drive up this sentiment you're talking about?
Yeah, I mean, these the demand shocks can be very significant. We have seen already some of that, and there can be more of these in future. And I think, for example, another surge in demand for the Bitcoin ETFs is quite likely. What we have seen is there was a huge surge in demand at the beginning of March, and then the demand leveled off. Now, some of that was due to profit taking, the inflows kind of slowed down a little bit, but it was more due to the fact that a lot of profit taking took place from the GBTC old Bitcoin trust that's now converted into an ETF after Bitcoin reached an all-time high. And some of this money actually did not leave the crypto market. It left the ETF, but it did not leave Bitcoin. For example, the Genesis bankruptcy estate actually announced and made it clear that even though they sold over $2 billion worth of Bitcoin ETF, they bought Bitcoin spot from the proceeds. So actually the money didn't necessarily leave the crypto market. And I would say that to me, it appears like the pattern of inflows has left, obviously at the all-time high, we had this GBTC profit taking coming in, but the pattern of inflows to me seems to have more to do with how the various platforms approve and authorize the product for their clients to be traded. And I think in this regard, we can definitely expect quite a few due diligence processes to come to fruition in the relatively near future, because for many, it is a requirement that the product should be out there traded for 90 days before it can be approved. Yep. So we're just coming very close to, actually, it could be today or yesterday that we passed the 90 days. So I think it's likely that quite a few platforms will be approving the product in the near future, which could mean another surge in demand. And on top of that, of course, the demand from institutional allocations to crypto is still only just beginning. And we had some really exciting announcements on this recently. For example, BlackRock carved out a space for crypto in 2 global portfolios with a total of $55 billion of assets under management in these portfolios. We had announcements from some very large pension funds. In fact, the largest pension fund in the world, which is the Japanese government employees pension fund, and also the Arizona State Pension Fund, that they are currently considering adding crypto as an asset class. So that demand has not even happened yet, or it's just barely just beginning. And then, of course, you have been alluding to the halving, and the halving, I think, now doesn't affect the supply, it affects the demand. The supply effect of the halving is so small, you can round it to zero. The number of Bitcoins that kind of the reduction that would come to the market on a daily basis is a 0.00 something % of daily traded volume. So clearly there is no supply effect, but there is a demand effect from the halving. A lot of people are really looking at Bitcoin as a safe haven asset. The demand for safe haven assets is very strong anyway. I'm sure you have seen what the gold price has been doing, and now silver is catching up as well. The whole macroeconomic backdrop and instability around the world is creating a lot of demand for these assets, and Bitcoin is now a part of that. And the halving is feeding into that, because after the halving, Bitcoin will be basically the hardest safe haven asset. It will have a stock to flow far, far better than gold.
Sure. Yeah. Bitcoin in pension funds. I mean, how far have we come, right? So, but the crypto market always has a number of narratives running at the same time, and there's a different one with Ethereum, and its kind of relatively disappointing performance after its successful upgrade on March 13. A disappointment expressed by himself at Vitalik Buterin as well. So. Yeah, the upgrade's impact on layer 2 transaction volumes, protocol revenues, and overall performance have certainly fallen short of market expectations. So I wanted to just to dig into this a little bit about the full performance of Ether and also the Ethereum layer 2s after the halving. I mean, what do you think happened there?
Yeah, so first of all, let me agree with you and reiterate that the upgrade was, as usual with Ethereum, absolutely flawlessly executed. It also did what it promised to do. It did make data fees dramatically cheaper, and it did make Ethereum-based layer 2 transaction cost of transacting on these platforms significantly cheaper, roughly tenfold cheaper than before. This was the promise. They absolutely delivered on that. I think whether the market is disappointed or Vitalik Buterin is disappointed, it of course depends on what they were expecting in terms of volumes. And Vitalik certainly said that he expected, in terms of the usage of these new data blobs, he expected 3 times higher than what he saw. Now that, of course, he says he's disappointed. That's based on what he says core developers were expecting. I think in terms of transaction volumes and revenues, these layer 2 platforms, of course, did well. We cannot say that they didn't. For some of them, the transaction volumes increased threefold. Overall, they roughly doubled for the Ethereum layer 2 universe. Of course, their margins more or less stayed the same, so their revenues increased in line with the volumes, more or less. So that's definitely not bad news. But of course, whether it's disappointing or not just depends on what people were expecting. And what we can see, where we can see the disappointment, is definitely the price performance of the tokens. Basically, in a market that was strong in March, and basically since at least flat since the date of the upgrade, Ethereum is down 10%. The leading layer 2 tokens, Arbitrum, is down 20%. Optimism is down 30%. So that's serious negative performance in the face of something that would appear as more or less good news. Greater volumes, growing revenues, excitement reinjected into the space. And I think there's a couple of reasons for it. First of all, the biggest beneficiary of the major layer 2 protocols was Base. Of course, Base doesn't have a token. So that's kind of eating the lunch of the protocols that do have a token, and that could be reflected in price performance. There's also external factors, external to the upgrade, that Arbitrum, for example, had a huge token unlock, and Optimism, a smaller one, but also had an unlock. So that's always, more supply coming to the market. That's always dilutive. But I think the main issue is that basically transaction fees, as volumes increased, the transaction cost started rising again. There was some congestion. There were spikes in fees, even going back to pre-upgrade levels on these new types of transactions that were suddenly the blob subscriptions and so on, flooding some of these networks like Base. And basically, the market narrative sort of concluded that this upgrade has not done very much in solving Ethereum scalability issues, that it's only been kind of a small step. And as soon as the volumes increase, then the scalability bottlenecks reappear. So I think that's the main reason why these tokens have not done well at all since the upgrade.
Yeah, sure. And the good news that many were hoping for and anticipating was spot Ethereum ETF, and that would be a significant catalyst. But some analysts are rating the likelihood of this as sometimes as low as 50%. But in light of this perhaps increasing uncertainty, what are the other developments do you think might be able to impact this trajectory?
Yeah, I mean, Ethereum seems to like a strong narrative right now. And of course, if the ETFs are approved, that would change that. But as you say now, the probability has been severely downgraded. In fact, the ETF issuer whose final deadline is the first to come up on the 23rd of May, that's VanEck, they actually said they are expecting a rejection. So their probability of the approval is approaching zero. And they say that on the basis that they're also an issuer of Bitcoin ETFs, and they don't see the same kind of dialogue and kind of comments going back and forth, questions between themselves and the SEC. Basically, what they saw before the Bitcoin ETF was approved, and this kind of silence they consider a bad sign in terms of the likelihood of the ETF being approved. That I would agree, it's a bad sign. ETF analysts also agree with that. So the probability has really moved towards, the SEC, probably because they do have to give an answer when it's a final deadline. So if they reject, that poses interesting questions, because it certainly would open a legal can of worms. Once they had approved, which they had, the Ethereum futures ETFs and Bitcoin spot ETFs, so now not approving the Ethereum spot ETF, the justification would have to be something very
certainly. There's also
strong, right?
Yeah, there's a bit more to that, I think, because recently, I think it was Matt Haugen from Bitwise said the asset management industry is actually so focused on Bitcoin and its products. So does Ether have a spot Ether ETF actually have the attention necessary to thrive? I mean, it might please the maxis, no doubt, but do you think he's right there?
Yeah, I mean, he is at the core phase. He toured his client base, and he really sees the challenges with awareness, education among new investors entering the crypto market. He did a tour marketing the Bitcoin ETF, talking to a lot of clients on the ground. So I think I would take what he says very much to heart. he clearly sees that just getting the idea of crypto and what is Bitcoin across is a stretch, and then after that, taking the next step that maybe it's too much too soon. So that could make sense. Larry Fink, BlackRock CEO, also said that he doesn't see so much demand for the Ethereum ETFs. But then there's other narratives. So, for example, VanEck, another issuer, they said that they see at least as much or more demand for the Ethereum ETFs as for the Bitcoin one. So there's differing views out there. I think generally when people make money, this wealth effect, it can happen more quickly maybe than the education, how long it takes to raise awareness, educate. I think it can happen faster because once people make money on the Bitcoin ETFs, especially if they make quite a lot of money on it, then it's psychology dictates that they start looking for the next thing where they can replicate that. And also, I think when institutions, that's retail behavior, right? And when institutions look at the asset class, allocating to crypto in portfolios, their approach is usually very bottom up, looking at the whole market, looking at where value is created, the growth opportunity, the use cases. So, but aside from the ETFs, the question is really asked, does Ethereum, now this upgrade was seen as a likely strong catalyst for Ether, and that didn't materialize. In fact, quite the contrary. And the next upgrades are now not soon. So the next upgrade, first of all, is not yet been decided what it will include. It may be a major scalability related package or not, or it may be more minor improvements. But in any case, it's kind of end of this year, beginning of next year. That's not likely to be a catalyst. And basically, scalability is such a major issue right now that it seems that for now the market decided that they're going with Solana on that. Other things that are a little bit more lower probability, but not impossible. If we see a resolution in the court cases that the SEC has with various exchanges, where the topic is always, are crypto asset securities? If that's resolved in crypto's favor, that they're not, that could be a strong positive catalyst. We have seen some safe haven allocations made to Ethereum, and Ethereum is actually a deflationary asset, and Bitcoin is only disinflationary. So there is also that, and we have seen at least one major corporate treasury allocate to Ethereum. So if that becomes anything beyond one or two treasuries doing it and becomes a trend, that could be a catalyst. And also in terms of institutional allocations, I think Ethereum is more relatable for institutions. It's a productive asset. It generates economic value. It's yield generating. You can sort of see it's more easier to understand how the value is generated and how to value it. So these are kind of potential, but right now it doesn't seem like any of these has taken hold. And there could be a sort of a negative, if the narrative stars on Solana, then it will swing back to Ethereum. So it wouldn't have to do with anything positive on Ethereum side. But if there's anything negative on Solana's side, then of course that would mean that the market kind of turns its attention back to Ethereum.
Sure, we'll dig into that scalability piece in a minute, but certainly Solana's been a fairly happy recipient of some good momentum and user growth and positive sentiment like recently. But I guess this is one point here that many will say that Solana's challenging Ethereum. But if you actually look at Ethereum's number of developers or DeFi ecosystem or market cap, which is roughly 5 times bigger, that doesn't seem the case. But what's your take on this maybe fake argument?
Well, I've been around crypto quite a long time, and every bull cycle has its Ethereum killers, EOS and Tezos and Avalanche and so on. So now it's clearly Solana, but so far nobody killed Ethereum, and the best that the Ethereum killers achieved is that they continue coexisting, but not coming close to rivaling Ethereum. And I agree with what you said. It's the network effects in this industry are everything, and Ethereum has that. It's very, very hard to unseat an incumbent in this kind of a market where the network effects are so important, and it requires a great number of factors to come right. Now, having said that, Solana has probably come the closest to sort of maybe not challenging Ethereum overall, but having a shot, because they have seen very good ecosystem growth. They actually flipped Ethereum along certain metrics, such as DEX, or decentralized exchange volumes executed on the protocol, NFT volumes, active addresses, transaction counts, stablecoin transfers at various points. And also they managed to brand themselves as kind of the go-to platform for certain types of applications, and very importantly for the decentralized physical infrastructure networks, which are basically a hot niche in the market, and they're favoring Solana as the platform. But many of the metrics, like you say, Solana is still way off Ethereum. And also, we shouldn't just compare, to be honest, to be fair, Solana's and Ethereum's ecosystems, but we should take the whole Ethereum ecosystem with the layer 2s, because that's really apples to apples, right? Because Solana has the integrated solution and Ethereum has the modular with layer 2s, and now even seeing some layer 3s. Basically that whole ecosystem is what we should compare to Solana, and there is still a massive gap there. The only thing is that the scaling narrative, like we said before, is favoring Solana currently, and they are seeing ecosystem growth. So I could see that, barring something really negative happening with Solana, that the price differential could continue closing between Solana and Ethereum in Solana's favor.
Yeah, it's certainly not having everything its own way, and some of its stability issues from the past. Maybe raising the head again. We've had back in 2022, Solana had 14 outages. It stabilized, and there was one in Feb last year. But again, we saw another outage in February this year, as its ecosystem and network had big amounts of growth. So, on this stability issue, what do you think? What do you think the investors are looking into this on?
It really matters, and Solana's outperformance. When you mentioned the February outage, the outperformance reversed temporarily, but then the market kind of reconciled itself to it. And there was another much more recent one where the failed transactions on the Solana network reached an all-time high, and this also got a lot of publicity. And then again, the relative performance reversed. It is something that matters, but obviously Solana is working very hard on fixing the bugs, and also providing the narrative that they're really on it, and these are just teething problems and a development roadmap, that they follow a certain path, and they're getting it done. Also, they also have an upgrade that's coming later this year, not very soon, but bringing a new validator client called FireDancer that would bring substantial improvement to the network. Also, we have to say that so far Solana has also seen, with the volumes, even though their transaction fees are very low, they have been sort of creeping up slightly, and they also have to keep ahead of the curve and keep upgrading. To me, it seems that Ethereum and Solana obviously chose a completely different path, and both paths are kind of long and windy and and not quick, but both are kind of in their own way getting there. But at the end of the day, when you ask the question, is scaling more important or stability? Really, there is no answer to that question. We cannot compromise on either, right? Like without scalability, crypto cannot fulfill its promise to bring the use cases and the high valuation multiples that we are seeing. But without stability, obviously things just don't work. So it has to be both. And I think we see two very credible networks follow a very different journey and making progress, getting there, but not getting there very fast.
Sure. It was good to end on a little counter narrative, which I think is something that you especially enjoy. I think that's all we've got for today. Thank you everyone for joining in, for Katalin coming here again and sharing your insights. For a deep dive on these topics from Katalin and her research team, head on over to the Sygnum website at the Learn section and the research, and then you can get a copy of the house view for this month we've just gone through. Please also join our LinkedIn community to keep up to date with all of our research, announcement, and launches. But thanks, Kat, again, and thank you everyone for joining, and have a great afternoon. Bye.